Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I've got some bittersweet news. I've sold out of my Enphase position. The stock market is down, particularly the NASDAQ, quite a bit today, hovering around 3% down. And ultimately for me, this was not a decision based on the Enphase company, which I still like very, very much, and I think that they have a bright future ahead of them. It was just this loss for me was getting bigger, and Enphase sat at the third position in my portfolio, so a very important part of my portfolio. And I'm just going to pause with Enphase. We'll talk about that in a second. But for now, I needed to stop the bleeding. The other side of this is with the full market dropping like I'm seeing right now, it could be a good opportunity to pick up some other stocks that have a higher ceiling. Enphase is a stock that's coming off of an all-time high here year to date in January or something like that. So we know what the ceiling is there for Enphase, but quite frankly, the fundamentals of the stock right this second don't support the price that it sits at. All right, so let's jump into where I bought and sold Enphase and what I'm going to do with this particular name in the future. All right, so here's Enphase Energy stock. Stock price today at $124.71, down about 8.5% today. But this is a year-to-date chart. So you see that today hasn't been everything, right? It was $172 back on April 26th, and now we're at $124. You started the year over 200. This is about where I got in, and it's just been a long year since, even with Biden in the White House and all of his tax incentives and stuff that he's renewed. We just can't catch a momentum break on this one right now. And you see on the fundamentals, I mean, P ratio of 186, EPS is 67 cents. This is a company that is projected to hit anywhere in the neighborhood of a $2 EPS, perhaps even higher, but they did run into some short-term tailwinds with the chip shortage that's going on in the world. I covered that on my last Enphase video. I'm still pretty confident that Enphase solves that chip shortage, but at this kind of multiple, we do have the solar industry runs around 20 to 30 on the forward PE. I think Enphase is more or less a technological leader in solar, so it doesn't surprise me that they would trade higher. But with the action we're seeing today and realizing that there could be more room for Enphase to fall, I had to pull the trigger on this one. Now keep in mind on this forward PE, that was updated on May 2nd, so the price action today, this number will come down whenever Yahoo does do their updates. Price to sales will come down, and then eventually we're going to get in a place where Enphase is just a no-brainer steal. You look over to the analysis tab and see what, we've got 20 analysts covering this one. You got an average estimate for earnings at $2. You roll that into 125, that brings you out to about, 60 or 65 on a forward PE. So that's getting close to the technology premium that I would pay, right? So about a 50. I think is a technology premium versus the rest of the solar industry that I would feel more comfortable with. And then next year you get into the threes, potentially $3.63, and all that stuff comes down. And the good news is Enphase this year, 70% growth. Some of that is because COVID shut down operations. And then next year, you could have a 35% growth. All right, so let's take a look at the chart because that adds some more context to this. Let me get this centered up here. You can see that we went below 200-day here, well below the 50-day. And frankly, RSI at 35 is not even as low as that thing could go. You had an RSI of 30, 26 maybe back in peak volatility on March 8th. So to me, there's just more room to run potentially for this one. If the market kept sliding, I think Enphase at the price of 125 is pretty solid compared to the historical offering. But if we see more market downturn, then this one could potentially go lower, and that's where I sort of freaked out. Okay, so here's the track record of my Enphase time in the market. Started, hopefully this thing shows up. It looks a little fuzzy to me. But January 14th, first purchase at 213, 5 shares. And then you can see I eventually built up to 50 shares, buying all the way down from 213 to 156, sold out for $6,300. And I had just shy of $9,000 in this. So the net loss here is minus $2,700. All right, so losing $2,700 sucks for sure. But here's the kicker with me on Enphase. I still love the company. I think they have a technological advantage. And I think that while Q1 earnings came in par with analyst expectations, I do believe that the stock is headed in the right direction in terms of revenue, earnings per share, and the fact that Q2, certainly Q3 and Q4, is a perfect environment for solar installs to keep pumping up. So what I'm going to do as an investor is take my $2,700 loss. That will go towards capital gains taxes at the end of the year, depending on if I sell anything else. And I'm going to either redistribute that into the market if I see other deals, but I will probably get back in Enphase. I'm going to use what's called the wash rule time, which basically says that if you sell out of a stock that you want to buy back in later, you have to let at least 30 days go by, or else you don't get credit for the loss you took on your taxes. All right, so over here on Investopedia, you can look this up on your own. The rule defines a wash sale as one that occurs when an individual sells or trades a security at a loss, and within 30 days before or after the sale, buys an identical stock or security or acquires an option contract. So if that happens, the wash sale rule prevents taxpayers from deducting a capital loss on the sale against the capital gain. All right, so long story short, if I want to use the $2,700 capital gains loss that I just got on Enphase, I have to wait at least 30 days before I can buy back in. If I bought in tomorrow, 14, 21, 29 days later, then that $2,700 loss would essentially wash out, and I would not be able to claim it on my taxes. All right, so bottom line, where does Enphase stand with me? I have to wait 30 days to buy back in. The delta between my cost basis and today's price was $55. So $180 was my average cost basis. Today, the stock dropped to $125. So that is a difference in the spread of $55. I'm betting that after 30 days, I can get back in Enphase for the long term, and it will be inside of that spread difference of $55, right? So let's just pretend that over the next 30 days, Enphase bounces back, the market bounces back, and let's just say it lands at 150. I can buy in after 30 days and that 150 and just start my cost basis all over. It was at 180, remember, and that was with me managing down and down and down. So even if I buy back at 150, 35 days or so from now, I've got that new cost basis for Enphase. I can feel a little bit better about the fundamental level that it trades at, and I'll be setting myself up better for long-term profits because I've reset my position and my cost basis is much lower. All right, guys, so hopefully this makes sense. This is not something I typically do. I typically hold long, But in this case, the spread between my cost basis and the actual share price was so big. And I think that Enphase's best years are still ahead of them, arguably year 2, 3, 4, 5 from today. So I might as well reset my cost basis and get back in, not bashing the stock. But when I saw that price drop into the 120s, it just made a lot of sense to get out and reset later down the line. Not to mention now I have a little pile of cash that if this market decline continues, I can add to other positions that perhaps are more fundamentally set up for success if the market kind of transitions to a value mode. All right, guys, let me know what you think about the Enphase sale. What are you doing with your Enphase shares? I'd love to hear about it in the comments. If you like this content, please give a like, subscribe to the channel, all the things. Thank you very much for your support. We'll see you on the next video.